last week. We planned two trades last week. One which was the dollar CAD, and I quite like the behavior of the dollar CAD because it kind of behaved on par to how we expect it to. So remember, we talked last week about the 130.56, which was our significant level. Hey, Indy. And we saw here that it found support here on this level. And what we wanted to do was we wanted to be short below 130.56. This was our selling point. But we wanted, because the way the price behaved around the 130.56, we wanted to give it some room. We didn't want to short it as soon as it broke because of the previous behavior. So we gave it some room. We came in at 130.50. Now we did have a move and a break at the 130.50, and this would have been a nice short position with a kind of a fairly decent stop at this small swing high. Okay, there would have been, you know, this would have been good enough to have placed a stop. It wouldn't be ultra strong. Okay, it's not going to be ultra strong. It wouldn't be as strong as this swing high that's well defined. Okay, but you know, in terms of, you know, the momentum coming before it, the momentum coming, you know, on initiation, it would have been certainly worth a shot. And you know, we had this break and it would have been a quick trade. As you can see, it went all the way to target, which was our 130.06. Okay, now look what happened here. Our 130.03 was a significant level, and the price came below and came back up to it. And when it came back up, it had a nice retracement, right, which took us right back to our entry. Yes, Cisco, there was some fundamentals that created this. So this is the point. It came back to the entry here. And is this not a great opportunity to go short if you were not able to take this? Isn't this a very low risk trade to take right here? Stop above the significant level. You place your stop above the 130.56. Okay, and you go short right back at the same entry. In fact, when the price went to target like this and you started to see it retracing, we just simply, you put a limit sell at the 130.50 area, and this will trigger you straight in. And where's your target? It's going to be the same target, 130.06, and it comes all the way back down pretty much to your target. Okay, so there's always going to be opportunities, more than one usually, around these levels because they're significant. Okay, first one broke, and if you still had the order on, well, then you would have been in and out in no time. Second time, more planned, less volatility in the market. You can see that by the price action, there was less volatility in the market. This would have probably been a safer entry, okay, because the decision had already been made, and then it just took its time to come back down towards the target. Okay, so that was the dollar CAD trade. The second one was the euro pound. And the euro pound was actually quite a nice trade because we planned the euro pound trade as a limit, a sell limit. And look at the perfection to this trade that you guys and I planned last week. We drew out what we expected to happen, and although we didn't get textbook, we got exactly that. Look, the price was coming down here when we were planning the trade last week, and we said what we want to do is see the price go back up to the 85.28, okay, which is just a pip above the level, okay, So we wanted to see it come back up. We set a limit entry to sell, and then we wanted to see a target to come down to the 84.68. This is what we said. Okay. Well, that's pretty much what happened. It came down. Admittedly, it went all the way to the target first, but that's fine. This just meant that we missed that opportunity. We didn't get in here. But the trade setup was exactly the same. And we just reset. Well, you keep the order there. The order wouldn't have changed because this never went up to trigger us. When it did, it came back to the 85.27 significant level. It just tipped its head above to trigger the 85.28. We said place our stop loss above 85.55, which was this area here. So our stop loss was in a safe position. And then the trade went down and hit the target. So again, this was a great setup, perfect trade plan, which we did, and that one also went to target. So we had again some good trades planned from last week. Okay, so that's our trade review. Okay, and now let's talk about the fundamentals that we have in the market, and then I will do the usual roundup. Alice, the signals for the MyFX book for signals and webinars are not on MyFX book yet. They will be on MyFX book shortly. We've got a couple of corporate accounts that's pending with Pepperstone. They're all going to be with Pepperstone. Okay, and soon as those corporate accounts have been approved, okay, they take a little bit longer when you do it as a company, but soon as they've been approved, then we will be placing all the trade setups, all the different trade setup and strategies. We're going to have different MyFX book accounts for all of them. Okay, so you can follow the progress of all the webinar trades. You can follow the progress of the signal trades and so on. And we're even thinking about creating different strategies that we teach and putting those strategies to the test again as an open book on the MyFX book for you guys to see. You know, it's an administration nightmare at the moment, but we're trying to work it out. So for example, you know, how well does the 4 days highs and lows strategies work? How well does the 80-20 strategies work, and so on. This is something that we have planned in the pipeline, and if we can get round the administration nightmare it poses, then we will be delivering that. But certainly you will see coming in the next couple of weeks will be webinar MyFX books and signals MyFX book, plus the copy trading is already there. Okay. Yeah, Taylor, I'm going to have to get some kind of programmer to help us with these. The issue is that you can't take every single signal. So I can say, okay, you know, throw the 4 days highs and low up there, but we don't take every single signal from the 4 days highs and lows. We take only specific ones, so it does need a human intervention, you know. So we're working on it. It may be a case that we have to lean on some of you to help us to execute some of these strategies and place those trades so that they also appear on the MyFX book pages. So, you know, don't be alarmed if I call you guys up and say, hey, look, I need a hand, you know, help us out with placing some of these trades and so on, you know, so we can, you know, keep these track records going, all right, because this is all about transparency. we are proving a point here that, you know, that we do make money trading, and the records are there to scrutinize and see. Okay, and if we lose money, you see we lose money. If we make money, you see we make money. Overall, we should be making money across the year. Okay, so that's the plan. All right, moving forward. Okay, so yeah, absolutely, Jude. Cheers, Christoph. Yeah, absolutely. It's all about keeping everything transparent. All right. So, and of course, any of you that has had, you know, that feels happy to, you know, to upload their monthly statement, you know, or want to post it on, you know, our Facebook or a page or whatever, you know, more than happy for you to do that. You know, don't feel shy. You know, it doesn't matter. You know, what we want to do is show that we are traders and we are trading, you know, and that we are all about transparencies. Even if, you know, you aren't making money, you know, you had a break-even month, or you had a slightly lost month, or even if you had a very good profitable month, it doesn't matter. Because if right now, let's say, for example, you post a loss, okay, that's your benchmark, that's your point. All right, so the challenge for yourself is, because you put it out there in the domain, so your challenge for yourself is, right, next month I must do better. Next month I'm going to, you know, manage my risk better, or I'm going to try to select better trades, higher probability trades, put more work into my analysis, whatever you need to do. And we are here to support you, okay? Whatever you need, we're here to support you and help you improve, so that next month we post our results and they are better. And even if they're just getting better until they go into profit, perfect. At the end of the day, it's about transparency, okay? So let's talk fundamentals. And I want to also welcome some of guys that are from a group from Ireland. They've joined us in this webinar. Say hi to those guys for me, everyone. Welcome, Ireland. And you know, we are growing back again as a community, as a family. We're getting bigger again and stronger, and it's looking really, really good right now. So let's talk fundamentals. What have you guys heard in the field, in the markets? What's been driving the markets? What data have you got out? Type in your chat for me what you have. This is all part of your education. This is all, we always have to keep our eyes to the ground and listen to what's going out there in the markets at the moment. All right, so Federal Reserve leaves policy rates unchanged from Cisco. Absolutely. Yes, good. Wendy says Trump should be banned from Twitter. I mean, there's a lot of people that's agreeing with you right now. Okay, yeah. Hi, Ireland, from John. Yeah, good stuff. FOMC suggests the Fed in no hurry to raise rates. From Paul, Article 50 is a step closer from the vote in Parliament today, and the yen is still weak due to government may do more easing. It's slightly turned around though, Paul. The yen is, because of the uncertainty which we'll discuss, it's actually gotten stronger because of comments from the Fed. Safe haven type of stuff is coming back in again. If you look at the chart for the dollar index, and it's momentarily broke down some lows of September last year. It's just recovering off of those lows at the moment, but it is, the dollar has been coming off since, Trump has been doing what he's doing, and maybe they want a weaker dollar. I don't know, but it is certainly getting weaker, and it's causing uncertainty and scarcity, and as a result, some of the safe haven currencies are coming back into favor. Trump firing the Attorney General from James. Yeah, he's just gone off, and he's just doing what he wants to do at the moment. How long Congress will let him get away with it is anybody's guess. But at the moment, he's having his fun in the playground, and at some point, the teachers is going to call him in. And then we'll see if or when the market stabilizes. But every day, when he speaks, the markets is reacting to it. Bill Gross says today that strong dollar is a threat to the US. Yeah, I mean, exports is becoming a problem, tourism, all of the stuff, that they export out to foreign countries. Not that Trump is too bothered about that, but yes, that can cause a slowdown in the US economy. Jude says Trump is the new market mover, and you're absolutely right. The market is hanging on to the words that's coming out of Trump's mouth and is reacting to it, and we're seeing a lot of volatility coming into the market. It creates opportunities at the same time for some, and the volatility is also a disadvantage to others. But certainly, as far as liquidity is concerned, it's pumping a lot into the market. Iran launched a ballistic missile, and the US put them on notice from Jude as well. Yeah, again, this story is at one point it was looking like there was going to be some peace between the two, but it seems that's not the case. Trump has probably sealed that with some of his policies. So good stuff from you guys. I mean, you've got to keep it coming. The fundamentals is what drives the market, guys, and it's something that we have to be aware of. It's something that we have to be abreast of when we are planning our trades. We cannot make the mistake of not taking the fundamentals into account. It's something, if we don't know, we have to learn and implement in our trading. It's what moves the markets, and if we don't know what moves the markets, we're always going to be at a disadvantage. So good stuff, well done. More of you get involved, listen to the different news, what comes on the wire. I'm going to, for those of you who have not got the information about what was released in the FOMC, I'm going to post the link to the article, which is on the Federal Reserve's website. I'm going to post it in the chat for you, and I suggest you, when you have time, read this article. Okay, I've just posted it in the chat for you. Read this article. And there's also something interesting about Janet Yellen in her defending role against the Fed. Trump is also trying to push for an audit of the Federal Reserve's interest rate decision making too. And this is a story that's probably going to get some traction, because this is the role of a central bank. It's never the role of a politician, and every time that's been in the hands of politicians, it's never really gone very well. So if you want to read that story, it's on the Wall Street Journal. And these are just places, guys, where I get some of my research from as well. So you want to be bookmarking whenever I post these links from various sites, bookmark them, and you can refer back to them as the stories are changing, because they're full of good research material, fundamental research material. All right, so let's do the roundup, and then we'll look for some trades to plan. So first of all, the US dollar, well, it's barely 10 days into the presidency, and President Donald Trump's controversial policies has seen the market react negatively for the US dollar. The dollar index, which tracks the greenback's performance, hit 99.36, which was one of the lowest levels since November. And this was just before the FOMC, so it did actually make a lower low than that. With a lower than expected macroeconomic figures is also weighing on the currency. President Trump's protectionist policies and poor macroeconomic data at the moment has left a negative sentiment in the markets, which is the root to the current decline in the US dollar. And again, we've seen some details from the FOMC. I haven't managed to read all of it yet due to it coming out so close to this session beginning, but I did pick up one or two news flashes, and one of the things that's also putting pressure on the dollar is the interest rate decisions forecast for 2017. We were told after the last rate hike in December 2016 that we're expecting at least 4 rate rises for 2017. The first rate hike was expected to be in March. Now the FOMC is saying that at present there is a 17.7% of a rate hike in March. So we're probably going to be not far off of down to possibly 3 rate hikes. And this happened last year. 4 went down to 3, then 2, and then in the end we got 1. So, that probability will see the dollar continue to weaken off. The euro gained 1% yesterday, and it's kind of picking up back after a slight profit take against the dollar due to comments from a Peter Navarro, and he is the head of the US President's new National Trade Council. He said that Germany uses the grossly undervalued euro to take advantage over the United States and other countries. This is his comments. There was reaction from Chancellor Angela Merkel. She denied the accusations, and she said that Germany is a country that has always called for the European Central Bank to pursue an independent policy, just as the Bundesbank did before the currency existed. Also supporting the euro was the inflation data, which is moving higher. It's currently at 1.8% against an expected 1.5% from analysts, and previously moving from 1.1%. So inflation heading higher there in the eurozone, and this saw a sharp surge yesterday. If you remember, if you saw the charts in the euro, gained quite a lot of ground yesterday. The British pound has been strong the past 2 days. Even today it's continued taking out the previous highs as the market anticipated that Parliament will vote in favour of triggering Article 50. Well, there was an attempt by the S&P to try to block that, which would have made it very difficult for them to go forward. And I believe they've legislated against that and have given the government the green light to move on to the next stage. The pound performed its best against the US dollar, but made gains against its other counterparts as well. According to Markets, which is one of these monitoring agencies, the UK manufacturing PMI data showed that the UK had quite a strong start to the year, despite coming slightly under par. The National Institute for Economic and Social Research reported that the UK economy is likely to grow this year by around about 1.7%. And this is higher than just after the Brexit vote, where the UK was only expected to grow by just 1%. The Japanese yen, well, risk aversion has led to a stronger Japanese yen as Trump's policies cause more confusion and uncertainty in the financial markets. President Donald Trump's immigration ban has caused uproar, preventing all refugees entry to the United States for 120 days and the majority of Muslim countries to up to 3 months. Implementation, though, of this order has appeared to be quite botched up, as the authorities appear to have actually no idea who the ban is supposed to be applied to. It seems that it's also included in that ban the green card holders, so it's been rolled out as a bit of a mess currently at the moment. The Swiss franc, this has moved to its highest point against the euro since we had the Brexit vote, and it's strengthening against all its counterparts. This has led to market speculation that the Swiss National Bank could be nearing an intervention to bring down the exchange rate. It seems that the Swiss National Bank is quite content in letting the currency appreciate, although a strong Swiss franc will only attract more investors and more buyers of the currency, leading to a higher Swiss franc and maybe forcing the hand of the Swiss National Bank. So as far as the Swiss currencies are concerned, I would suggest watch this space. And finally, the Canadian. An unimpressive performance from the Canadian dollar so far, only really taking advantage of the weaker dollar for obvious reasons. The Canadian dollar, despite having some positive macroeconomic data, Canada's gross domestic product rose by 0.4% against a projected 0.3%. Raw materials price index also increased by 6.5%, and this was surpassing the expected 2.9% from analysts. And finally, the industrial product price index also rose by 0.4%, yet the Canadian hasn't really performed that greatly. Crude oil recovered slightly yesterday, but overall and all, it's kind of underperformed. So that's my usual fundamental roundup. Now that said, think about the fundamental influences we've just discussed. What are the likely currencies that we can expect should begin making some moves? Where are the trade opportunities? And if you type in the chat, we'll make a note and we'll take a look at some of those currencies. So we have the pound dollar, dollar yen, Dollar Swiss. You might be on your own on the dollar Swiss. We'll see. We'll have a look. Euro dollar. Quite a lot of you saying dollar Swiss. You guys are brave. I mean, you know, with the Swiss National Bank, you know, potentially acting all relaxed with one eye on the markets. You guys really want to get in there? We'll have a look and we'll see. I need to read a disclaimer for trading the Swiss franc to all you guys. Right, what else have we got? Aussie, New Zealand. I'm not sure about that. They are currently both strong currencies. It might be a bit of a tug of war. Gold, yeah, gold would probably be a good one. If the dollar selling off, gold would be a good one to buy. Euro, Swiss, Simon, horrible currency, horrible currency. I'll write it down. Euro, pound again could be. We can take a look at that. Euro, pound maybe. Pound, CAD. We could take a look at that. Spread might be a little heavy. We'll have to take a look. Yeah, Paul, I do not like the Swiss. They're just they're very powerful, and they tend to not like to. They like the element of surprise, let's say. Yeah, absolutely, John. A couple of years ago, and even before then, you know, we had them just keep surprising the markets. All right, so we've got a few currencies down here. Let's go to the charts and take a look. And for all of you new guys that's joining us here today, we always start with the daily time frames to look for the opportunities, and then after that we drill down to the smaller time frames to find our entries and trade management. So let's start off with the pound dollar. Fundamentally, it's good for a strong rally, and you know, I say this all of the time, and every time we look at these charts for the pound dollar, this is not a recovery. Okay, it's not a recovery. You just need to look at the higher time frames to keep it in perspective. This is a rally. We will enjoy the rally. Okay, but I don't want anybody going in there right now. It's too early to say we're going to hold the pound long term. All right, the economy needs to prove itself. Once the economy proves itself, then we can hold the pound long term. All right, so it's a nice looking setup. Why? Because you can see that we have a significant level, and we were calling out these levels last week, if you remember. All right, so we have a significant level here in the pound, which that number is 126.71. Okay, and we touched it here a few days ago, which saw the pound sell off a bit, and we come right back to the same point, and the behavior has just kind of begun. Similarly, the pound is just coming off from that same level. Now, in light of the recent fundamentals, what we've seen today, there's a good chance, I mean, the dollar index is testing a very strong level. Okay, so let's just quickly go back to the dollar index and let me show you what I mean, because this is what's going to determine the move in the pound. So look at the dollar index and look where we are. This level here is quite a significant level. We're going to just zoom in and take a better look. Okay, so it's this level here. Okay, this level here, and you can see we are testing it. It was strong resistance here for a few weeks back in a year ago. Okay, January 2016. It was strong resistance, and the dollar could not break above this level, and as you can see, it made quite a significant sell-off before finding support, and then it turned around, and when we broke through these levels, we cleared out the stops that were sat above this area here from those that decided to short the dollar. It cleared out the stops, and we had this big move, and now the dollar's come back to this level in an attempt to find support, to pick up more buyers, to make its next move back up again. Now, that's all well and good, and to the point, it's textbook. Now, what can change the destiny of the dollar index in making this move is if the fundamentals, whilst it's at this level here, does not support the stronger dollar. Absolutely, Cisco. Trump. Okay? Trump. So right now we're seeing the dollar test a very strong, significant level, which means that if we have buying pressure coming up here, now when we come back to this level, those buyers have already an invested interest to keep the dollar index above this level. Now, if that's the case, this means that they have their exit plan, or at least they're reducing exposure in the dollar. It's going to be below this level here. Okay, so you will start to see, you know, any momentum move below this level in the dollar index, we will start to see the triggering of the stop orders, causing the dollar to weaken, and every other currency traded against the dollar will start to strengthen. So this is setting the scene from what will spark the move, right? So that's in mind. Let's now go back to the pound versus the US dollar and have a look at the same thing, but pretty much inversed. The dollar index on LCG, Wendy, is, I got it up here because I anticipated before the session you was going to ask me this question, so you're going to be impressed here. Look at this. In a flash, I have it for you. Again, it's the same levels we're talking about. It's the DXY hyphen MAR because it's the March contract. All right, so if you go into your LCG, Wendy, and you right click on the symbols, and then you go onto the US indices, you should find the DXY hyphen MAR for the dollar index. Okay, and you'll see the same chart. It's exactly the same chart that you're looking at here. All right, so that's one I prepared for you earlier. So back to the British pound. We are at a same kind of significant level on the British pound. You know, this area here that it's trying to break, this 126.71. So let's zoom in here and look at price behavior. Look what happened here, okay, in November 2016. The price came to the same price point, the 126.71, the same price point, and look at the price behavior. The traders sold off the British pound. It came back down again. Then it came back to the level, and look at this bar here. It sold off again. But the fundamentals, the profit taking after the Brexit movement, saw some profit taking which broke above this level, and then it sold off again. Okay, now coming back to more recent times, we've come back to the same level here, and it sold off again. Not the same drop, but it still sold off again, which tells us this. This area here, potentially magnitude of buy stops. This area here, magnitude, buy stops. This area here, magnitude, buy stops. So this means if the pound dollar tomorrow or the day after gets above 126.71, what do you expect to see on the chart? Type in the chat for me. A triggering of the stop orders. If it gets above, guys, if it holds, then you're right, we expect to see a sell-off. But if it gets above and picks up momentum, it will trigger the buy stop orders. So we can expect to see a fairly strong positive move. If what needs to happen? Trump to continue to annoy everybody and the dollar index to break those levels, the pound to continue moving on, the UK to continue moving on closer to the activation of Article 50. The market's reading this as positive. So this means that we will clear out the buy stops, causing a strong move to push higher. There is our opportunity. Now let's look for the plan. To look for the plan, we're going to use a significant level, but we're going to go down a size. We're going to go down to an execution time frame. In this case, we're going to look at the 30 minutes time frame and see what's happening inside. So you can see that this thing is working like clockwork. Look at this momentum move when it came back above the 125.53. Strong move because this level had a role before. It has been a previous area of support. Look at this. It's been a previous area of support. So it broke above, cleared out some of the stops from the shorts. It came back and confirmed it as support, no reversal. And then we had a strong momentum move. And that strong momentum move hit the 126.71, and when it's hit there, because it's a significant level, look here. So what those traders have done, because already we've seen from this level it came down, they have taken profit when it came up and hit this level, and now you see that it's come off slightly as they are just banking some of these profits, preparing for the next move. So what this means is that a move back above the 126.71 is going to be a very good move. We should see look at this. For this to occur like this, it simply means that they went short. They sold. Now, if they go short, do they need to protect themselves? Can they protect themselves? How are they going to do that? What are they going to use to protect themselves? The stop losses, right? The stop losses. So they have to place the stop losses above here. This is what we was talking about on the daily time frame. Yes, Wendy, the swing high. So if the price does this, it comes back down like so, then turns around, gets above, hit the stop losses, bingo, we have a move. All right, that's what we want. So we need to find an area because it's a significant level, and significant level means volatility. Look, it goes up and down for a while before it finds its direction. So we need to give this some room to work. Okay? Now, we know that where the price is at the moment, we've got the 127 whole number here. Okay? The 127 number is here. So we know that that's also going to act as a psychological resistance. So we kind of need to wait till it gets above there too, which is going to give us time, all right? Time for it to find support on the 127, 126.71. So I'm going to suggest something like this. This is where I'm going to look to buy. I'm going to look at going in at 127.10. Okay, because I want the stops to start being cleared out. I want the psychological number to be for them to sell it off from there again as they take profits because they're scared of the psychological traders. I want it to come back and find support, get grounded and be rooted at the 26.71, and then once it makes its journey back up again, now I know it means business. It picks me up and it's going to take me to the target. Now the target is going to be the next area of resistance, the next significant level. So let's put this in. This is going to be, this time round, it's going to be a stop buy, a buy stop order. So I'm going to say buy stop, and the price we said is 127.10. Okay, buy stop, and the entry is 127.10. I want my stop, in this case, stop loss, because I'm expecting it to find support at the 126.71. I'm expecting to find support there. I want to keep my stop below there. So I'm going to say my stop loss is going to be the last swing low. Okay, and a swing low is something like this. You have a move, a low, and then it moves. So below that move is the swing low. So I want the swing low to be below 126.71. So I'm not going to give a specific price point, but so long as my stop is below 126.71, we should be fairly safe. All right, 126.71. And my target, well, we've got the 127.95 over here. So I'm going to come in just before it gets to that resistance, because I know the 127.95 is a profit take target. So there's going to be traders who are also buying from lower or higher, is going to look to take profits at the 127.95, which may see the prices turn around. So I'm going to get out before that occurs. So I'm going to say my target is going to be 127.90. 127.90 is going to be where my target's going to be. All right. Now, at the moment, because the pound dollar is very strong, it's in this shorter trend, in this consolidated trend. It's currently trending up, which means that it's not really good for a buy in light of what's happened today in Parliament. Sorry, it's not good for a sell, rather. So in light of what happened today in Parliament, the short setup, we are kind of a bit away from that. I would not really be looking to go short unless it starts breaking these levels of support, which is, you know, over 100 pips away. So that's something, if that happens, you know, then we can take a view. All right, we'll update you about that in the groups. All right. So those of you that want a screenshot, screenshot it right now, and we're going to look for one more currency to plan a trade on. Okay. So pound dollar, buy stop entry at 127.10. Stop loss is going to be at the swing low below the significant level of 126.71, and our target is going to be 127.90, just below the next level of resistance. This is technical and fundamental trading. Okay. Right. So the next thing we want to do is go back to our daily time frame to look for the opportunity, and I'm going to look for at the dollar yen, which is next on the list. And just see if we have a setup for the dollar yen. Now, the argument for the trade is we already understand what's happening with the US at the moment. It's all about Trump and his policies, which is causing the dollar to weaken. And in a time of uncertainty, traders seek out the safe haven currencies, the neutral currencies, i.e. the Swiss franc, the Japanese yen, and then they look for other assets like gold, silver, and so on. So the more uncertain the US becomes, the stronger the Japanese yen will become. Okay. So although the dollar made some gains on the yen today, it's given back more than half, and it's sitting below or on a significant level. The only issue there that I have is the condition of the market, which is this area here. Is currently the market condition is kind of a sideways. You see it's going up and down, but it's practically moving sideways. I would have kind of liked to see it on a spring bound upwards to prepare to drop, or it broken out of these levels, in which we would see a continued move down, and we can get in you know, on the low of something. So for that reason, I think with the dollar yen, we need a little bit more time. Maybe if we have another negative day tomorrow and it sells off and starts to break these levels, then maybe for the next few days we'll get a nice move to the downside. But at this moment, we need a little bit more time. So we're not going to do the dollar yen this time round. Let's have a look at the dollar Swiss. So the dollar Swiss, again, it's trended downward as we've seen the Swiss franc appreciate. We have now an inside bar here with the dollar Swiss, which suggests that the dollar may have some kind of recovery-ish tomorrow, which would mean that, you know, it might not be, we might be getting something like this on this pair. Obviously, if we get a further weakness in the dollar, it still kind of puts us in a sideways move for a little while. So again, for that reason, we're kind of give the dollar Swiss a bit of a miss. The next one we have is the euro dollar. And the euro dollar is not that different from the British pound. We had a big strong day yesterday, and all what we've seen is some profit taking, and it's back above the significant level. This is the sign of the strength part of the euro versus the dollar, the fact that it's got back above the significant level. And that means quite a bit. You can see this level is well known. Look at this. It's well known, and we did not stay below this level, which is the 107.61. Okay, we're back above the 107.61. So it's kind of suggests tomorrow we expect a stronger move in the euro. Now, Draghi is speaking tomorrow. Also, Carney as well. It's not to forget that. As far as the policies are concerned in the UK tomorrow, we can expect no change, which means the pound should continue to climb, which is another positive reason for the setup that we have. But the euro is still looking fairly strong, and normally when Draghi speaks, he has this habit to be more of the hawkish type of deliverer, and the euro tends to strengthen from when he speaks. So what you guys need to do tomorrow, you need to just pay special attention to this data that you see here. Go to forexfactory.com. Those of you who's not familiar, where we get our calendar. 12 p.m. UK time. This data is not expected to change. There's not expected to be a move on interest rates. We're not expecting anybody in the Monetary Policy Committee to vote for a change. So it's not so much that. Inflation report, there may be something in there that's likely to be positive, because inflation in the UK is also moving in the right direction. So I think that's going to be quite okay for the pound. And even in the construction PMI, we are still expecting growth. They're expecting it to come off a little bit, but they're still expecting it to be growth. So long as that number is over 50, whatever the pound does, it's more likely to still appreciate. This, however, is slightly different. Okay, Draghi is going to be speaking at around 12:15, and is likely to talk the euro up. So we will have to just be a bit cautious. Okay, if our trades have not triggered yet, then we may have to take them off and then put them back on afterwards. Look for an opportunity to put them back on afterwards. All right, so let's just see first of all if there is a setup for the euro dollar. It doesn't look too bad on the daily, but let's go down and have a look on the smaller time frame and just see if there is a setup. So the issue we have here is that it's now kind of retracing towards the end of the session. This is going to be more like a limit trade, and that move was fundamentals. This was the FOMC stuff, and you can see where it's sitting is along here. So this information here is something we can use. That shows us that 107.61, they are paying special attention to it. So since we've had this move come back up again, we've not come back to it. So what we can actually do here is we can set up a limit order, a buy limit, rather than looking for a stop, because a stop buy, we've got these levels here to worry about. Okay, so there's no point us getting in here and then having all these obstacles so close to us. But if we can get a pickup from down this level, it gives us a good move. Okay, so this is our last setup now for the for the evening before we wrap it up. So let's do this. We've got the 107.61. So that's the significant level, and this is going to be where I want to pick it up. Now this trade, guys, is going to be a buy limit on your platforms. This is a buy limit entry, and I'm going to use a significant level, okay, when it comes back to 107.61. All right, 107.61 is where I want to buy. Okay, now this means that my stop needs to be below 107.61. Not sure here. Actually, this is not so bad. This is still going to be less than 40 pips. It's going to be 30 odd pips down here. So we can place it. It's, you know, it's already established. Okay. It's already established, this level right here. So I'm going to say, and you know, if I say something like 107.26, and it's nice with this area over here. So let's do that. I'm going to say my stop loss is going to be 107.26. All right, so $107.26, and the target, well, we have this significant level over here. All right, we just have to be mindful of this level, these levels here, guys. All right, let's have a look at this. What is this? 108.06. Let's have a quick scout at the daily again, and let's see what the probability of a break of that is, which is quite strong, because if this bar closes, the most important thing right now is if in the next 45 minutes, if this bar closes above 107.61, then there is a very high probability of it taking the highs. All right, so we can see, I mean, that looks probable in any case, because you can see on the smaller time frame it's actually pushing higher. So this would see quite a continued move, so it should quite happily get us to this level here. So let's have a look at that. Let's go down to the 30 minutes again. All right, so you can see it's just trying to retrace here. So we can say 108.10. Okay, 108.10 will be a decent target. So my target for this trade is going to be 108.10, which will just be enough to give me the volatility at the 108, and that's just going to come off just before it hits the resistance level around about this level here. All right, so again, if you want to take a screenshot, this is my setup for the euro dollar. I'm going to look for a limit buy, which means remember what we did last week. All right, so remember what we did last week. We want to see it wherever it goes. All right, let's say it does something like this. All right, we want to see it come back. We're going to be patient. We want to see it come back to the level like this, pick us up. That's where we take the buy, and then let it go all the way to target like this. All right, so once it picks up and we take the buy, our stop is going to be at this level here. Once it starts moving, we can reduce risk if you want to, because it's going to be below the 107.61, and we stay on till we get to the 108.10. All right, so that's the setup. Second setup for this week, which is our euro-dollar trade. All right, any questions, guys, on what we've just discussed? If you have a question, type Y and I'll give you time to type it. If you don't and you're happy, just type in. John says, can we just see the other one? Okay. Cheers, Jude. Take care, buddy. All right. I'll just go back to our other trade, which was the pound dollar. Those of you who missed the pound dollar, you can screenshot the setup. Otherwise, the rest of you, you can take off. Apologies for the where is that? That's supposed to be there, isn't it? Yeah. Apologies for the run over again. Sometimes we just have to finish everything. And I want this session, guys, to be as educational as possible. All right. So I'm never going to get to the point where I'm just going to do signals, buy here, stop here, target there, end of. All right, never get to that stage. So if in future we have to just put our hands up and you know, extend it by half an hour and make the sessions an hour and a half, we will head that direction rather than just throwing out signals. I always want you to know fully the science behind our trades and the reasons why we're taking the trades we're taking. All right, so happy trading for tomorrow. We will be around and in the groups tomorrow if you need any support or assistance with the trade. This session is recorded. It will be available on the website, and the guys from Ireland just shoot us an email and we will send you the recording. Otherwise, take care all of you guys, and bye for now.